Stop losing trades. This is the only strategy you need to start winning consistently. Forget the confusion. Forget the indicators. All right, first things first, we're hopping on the 4-hour chart. Why? Because we need to figure out where the market is trying to go. Like, is this thing pumping to the moon, or is it falling like my last account balance? Now, here's how we figure it out. If the market is making higher highs and higher lows, boom, it's an uptrend. If it's making lower highs and lower lows, congrats, we're in a downtrend. And if it's just moving sideways, bro, go touch some grass. Once we got that bias locked in, then we move to the 1-hour chart. That's where things start getting spicy. Now, what are we looking for? Liquidity. And this right here, this is a prominent low stacked with liquidity, meaning there's a fat pile of stop losses sitting below this level, just waiting to get collected. The market isn't moving randomly, it's hunting for cash. And that cash, it's sitting right below these lows. So when price dips into this level, we're not panicking. We're getting ready for the real move. Now, this is where things get even more precise. We're not just watching price move, we're reading what it's trying to tell us. So we drop down to the 5-minute chart, right where that liquidity got wiped out. Here's what we need to see. First, a break of structure. That's the market's way of saying, all right, I've grabbed my liquidity, now it's time to move. And when that happens, price leaves behind both a fair value gap and an order block every single time. But hold up, we're not reacting just yet. Instead, we're waiting for price to roll back into these zones, because let's be real, institutions aren't making moves randomly. They wait for the best prices before executing, and we're about to do the same. All right, so now that we've marked out our fair value gap and order block on the 5-minute chart, we're not just going to sit here and pray. It's time to get even more precise. And to do that, we're dropping down to the 1-minute time frame to really fine-tune our entry. See, a lot of traders mess up because they enter too early. Just because price is touching our zone doesn't mean we jump in. We need confirmation, and that's where the 1-minute chart comes in. It lets us see what's happening inside the bigger move so we can catch the cleanest possible setup instead of guessing. Now, here's what we're waiting for. When price rolls back into our FVG or order block, we don't just enter blindly. We watch for a break of structure on the 1-minute. Why? Because a BOS confirms that momentum is actually shifting. It tells us that price isn't just tapping in for fun, it's ready to move in our direction. Once that BOS happens, that's our green light. No second guessing, no overthinking, just a clean, high probability setup. We strike when the market tells us to, and that's how we avoid getting wrecked by fake moves. Now let's talk about something people either totally ignore or overthink. Take profits and stop losses. Because what's the point of a sniper entry if you don't know where to exit, right? First, we'll be looking into take profits. Because what's the point of a fire entry if you don't know where to cash out, right? We're targeting prominent highs, and this right here is a perfect example of one. We can use this as a take profit level. That's where liquidity's stacked. And guess what? The market loves to head there to grab it, so instead of playing the guessing game, we're setting our take profit right where the money's hiding. Let price run up, hit that zone, and just like that, boom, trade closed, profits in the bag, no stress, just precision. All right, now let's talk about stop losses, because while profits are fun, protecting your capital is what keeps you in the game. Here's how we're doing it. Once you've marked out your fair value gap, your stop loss goes just below that zone. Not miles away, not too tight, just enough room to let price breathe without getting wicked out by noise. And we're aiming for a clean risk to reward. 1 to 2.5 is the sweet spot. That means for every 1% you risk, you're looking to make 2.5%. You're not gambling, you're trading smart. All right, quick recap. We start on the 4-hour chart to find the trend, move to the 1-hour to mark a prominent high or low along with the supply or demand zone, then hop on the 5-minute to spot a break of structure and a fair value gap, and finally switch to the 1-minute for one last break of structure to take the entry. All right, if you want free signals and more breakdowns like this, make sure to join my Discord. It's completely free. And if you learned something new or enjoyed the video, drop a like, hit that subscribe button, and turn on the bell so you don't miss the next banger. Catch y'all in the next one.